Hello, this is Matt on the Moon Lambo channel on a day like today, where there's blood in the streets as it pertains to crypto markets, and people are absolutely freaking out. I just gotta tell you that I'm a big fan of what Raoul Pal has to say when it comes to stuff like this. Now, Raoul Pal, many of you will be familiar with him by now, former Goldman Sachs executive, XRP holder, very well known in the world of crypto, probably about 1 million followers on social media platform X. He's the founder of Real Vision, and he does believe that XRP is going to be hitting $10. He said that around the time that XRP was around $1. He said tenfold increase. So he gets it. He's a long-term guy, and I just want to tell you, in the world of crypto, there are rules to live by. And although this phrase of Raoul Pal's, which is, and I'll censor it here, "don't F it up," is a more recent mantra from Raoul Pal, I've been implementing roughly the same thing that he's espousing here for myself for over 6 years. So this resonates with me. It's incredibly sound advice, and you need to hear it and understand the rationale behind it, especially on a day like this where people are making stupid financial decisions based on their feels. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. So, as you've probably heard by now, Bitcoin did drop below $40,000. XRP, at the time I'm recording this, got as low as about 52 cents. So it's worth hearing this message. And this is a picture of Raoul Pal. Again, I'm sure many of you are familiar, but this has been covered in crypto media, including this website. And look at this headline: "Don't F this up. Expert issues stern warning to investors." And I don't need to read the article. I want to share with you exactly what he said on social media platform X. Let's just cut to the chase here, right? On January 6th, he shared this message. Remember, and he's got this list. He didn't put little bullet points next to it, but it's a list of things. He wrote, number 1, no leverage. And folks, is it not abundantly clear at this point why you should not have leverage? You can absolutely get liquidated in the world of crypto. And I'm just sitting here thinking, oh, I'm sorry. Are the thousands of percent gains that have been achieved the last 15 years resulting in life-changing wealth, I'm sorry, that's not enough for you? You need to add a multiplier effect to that? Leverage? What in the ever-loving hell is wrong with you? Like, no leverage. No, it's stupid. STOOPID, stupid. Absolutely not. And then the next point is no FOMO, fear of missing out. And it seems like a basic one, right? People don't understand that when they jump into investing, especially in the world of crypto, something starts going up, they feel, oh, it's validated, that means it is good, it'll keep going up. Nah. By the time you see that, there's a high probability that it is indeed too late. Next, top 3 to 5 assets as main bag. So I've heard him talk about this concept in multiple interviews. And what he typically says is you just want to make sure that you want to have actual high quality coins that where they're actually useful. It's the same thing. This is why I was saying this resonates with me, because back in 2017, my whole motto since then has been utility matters and will win the day. Well, this is another way of saying that. You go to the coins where stuff is happening, where people are building, where there's developer activity, so on and so forth, where it's being used for stuff. And so if you got a bag of those, yeah, you just hang on to them. And then he says self-custody or multi-sig with good wallet hygiene. And folks, I know a lot of you out there listening. I know you don't have to doubt yourselves. I know a lot of you out there listening are keeping all of your crypto on exchanges. That's a bad crypto investor. Bad crypto investor. Stop doing that. Don't do that. We've seen too many exchanges get hacked or just collapse or find out that they're Ponzi schemes. FTX, right? So, not that it's likely that would happen to, the likes of Coinbase, this or that, but you never know. It might be wise to take possession yourself. And I know that's not for everybody. Some people are going to say, okay, but then what if I lose my private key? Okay, fine. If you've weighed the pros and cons and you think it makes sense, okay, go ahead. But I'm with Raoul Pal on this one. Self-custody is the way to go. Now, this next one is the only one where I perhaps would a little bit disagree. He wrote, only trade a small degen bag, less than 10%. So if you're going to do the stupid micro caps and the meme coins and this or that, where it really is pretty much just gambling. Okay, he's saying make sure that almost all your money goes into the good stuff. If you really have the itch and you gotta follow through with scratching that itch, fine. Less than 10%. And so if you're one of those people, go for it. For me, mine's close to 0%. That is not my game. My whole deal is large and some mid cap coins, and that's pretty much it. It's that because it's great because the market has done the work for me at that point. It's the same concept as investing in the S&P 500. The whole world, like everybody that's paying attention to the market and buying and selling, they're putting their dollars, they're voting where they think it makes sense. They've done the research for me. That's why having broad exposure to an asset class makes sense. So when you're talking about investing in large and mid cap coins, kind of like if you were to kind of, so to speak, make your own little crypto index fund, that's why that makes sense. And of course, as stuff goes in and out of positions and things change, well, of course you monitor that, but that's the concept. And then he notes next, hodl over a longer time horizon. And this is exactly what I'm doing with my XRP. I've been holding my XRP for over 6 years. I will hold however long it takes. And then he says, zoom out and remove the noise. And folks, that's why I'm making this video on a day like this. Because there's blood in the streets, people are freaking out. Zoom out. It's normal to have these pullbacks, which is what he says next. Expect 35% pullbacks frequently. And, we haven't even had that big of a dip like today. I mean, yeah, things have been down ever since broadly speaking, since the ETFs were approved, because that was, if anything, it was like even if not a sell the news event that day, it kind of has developed into that since then. I knew it wasn't going to be, I shouldn't say no. I was confident that it wasn't likely to be, a buy the news event. And then he says, buy the effing dip if you can. Exactly. So you're not FOMOing, and when people are panic selling, that's the time to buy. And then he says, hashtag DFTU, don't F this up, which is absolutely spot on. And then he said, just this morning, before Bitcoin collapsed below $40,000, he wrote, points number 6 and 7 in play. It won't be the last time either. The final correction low could be sharp and quick or slow and grinding. No way to know for sure. Some take a few weeks and others take a month or more. So he's talking about points 6 and 7. So that would be hodl over a long time horizon and zoom out and remove the noise. Exactly. So on a day like this, let it sink in a little bit. And this is exactly what I've been doing. This has been my whole mentality. And there are additional things that I'm implementing and will implement rather when we get to the point where we're in euphoria mode again, and I finally start cashing out to USD. Another rule that I'm implementing, and I'm going to be very strict with myself about this, is when we're in euphoria mode, when I cash out, that money's out of the market. It is not going into anything else. Those are going to be guaranteed profits once I sell. That's it, period. That is a rule. I don't care if I think, and even if I would have been right to put it into something else, I don't care. It's a strict rule I have for myself because I don't want to F it up. And so I have that rule. Now, once we enter bear territory, I may be willing to put in, maybe it'll be 10%. I'll decide something smaller, though, back into crypto once it's very clear we're in a bear market. So maybe that would be over a year later. But the rest of it, I'm going to go into conservation mode, preservation mode. Meaning I'm going to invest in other stuff, whether that would mean real estate, whether it means putting it into the stock market, equities. I'll decide what that means, but it's going to go into more traditional finance types of things. Boring stuff. But yeah, sure. If I want to take a bit of it and, just throw it back into crypto, I will. But mostly what I'll do is, since I'm going to continue to work, I'm going to earn money and then put the new money I earn, into crypto. I'm not going to stop investing in crypto. I'm not going to stop running this YouTube channel. And so then there was this from Frecky, XRP community member Frecky, who has been in crypto since 2011 and actually has a career in finance. He's actually the reason I came across this most recent post from Raoul Pal, as well as the one that I started with from January 6th. So shout out to you, Frecky. Thank you very much, because he actually tagged me in a separate post I don't have on the screen. Thank you very much. That's the reason I came across this. But this stuff resonates with me, and Frecky gets it too. He's been doing this forever. And so somebody responded to Raoul Pal and wrote, "It amazes me how every downturn in price, people freak out. It's the long game. Zoom out." And Frecky responded to that person and said, "Humans are emotional. And when emotional, they make poor decisions. Also, why majority of people that manage their own money do so poorly long term. No one knows when the best days in the market will be. You have to already be positioned to capture those days/returns. And those days are few and far between. So that's why professional money managers also don't play games going in and out of markets with cash/full positions. Many reasons why, including taxes, but yes, have to be in to capture the growth long term and recoveries. Most retail sells bottom. Okay, that is sage wisdom, and please listen up for that part. Because perhaps this might be the. Well, it's hard to determine exactly what is the most important point in this video because they're all absolutely crucial and required as far as I'm concerned when it comes to investing in crypto, which is the most volatile freaking asset class on the entire damn planet. But Frecky also shared this with me, and I'd shared content like similar to this, similar types of things on my channel a number of times over the years. But this one's pretty clear and concise, so I thought I'd share it. It's from a website called Dimensional. What happens when you fail at market timing? And folks, this is why it doesn't make sense to get in and out of positions. It doesn't make sense to FOMO. Oh God, I'm missing something, so now I need to sell to go chase that thing. And then the thing is sold starts taking off, right? You've heard all that before, right? But if you're worried about that and you're worried about the market go lower, your net worth goes down, you don't know if right after you sell, we're going to have a major bullish day. And most of the gigantic days, just in equities in general, that result in the major returns over a long period of time, it's actually just a handful of days or maybe even weeks. And if you miss those days or weeks, your returns are going to be down substantially, which is why either you have exposure when that time comes or you don't. And if you're the type of person getting in and out of positions because either you're afraid or you think you know better, well, good luck, because the data says you are going to screw yourself, whether you're talking about equities or whether it's crypto. And so on the screen, what we're talking about is equities here, but the same concept is true in crypto. The biggest days in crypto, they're few and far between. There's not that many of them. Yes, we've been trending upwards for 15 years, but most of what it is to be in crypto is a lot of sideways chop. There's scary down moments, but the biggest moves are few and far between. If you're trying to time markets, you're going to screw yourself. And so that's why when it comes to my XRP, I could not possibly be more stubborn. I bought a crazy amount, subjectively to me, what is just like a ton of XRP, and then I finally made myself stop in October of 2020. And it's still even today, even though I bought a bunch more crypto since then, it's still about a third of my total crypto holdings in terms of United States dollars, because I did go that bananas. But I've been diversifying further since then. I'm very comfortably holding that amount of XRP, though. I'm very confident in it. But I'm very strict. I'm taking this super seriously. I'm very disciplined when it comes to this because I believe that's what it takes to achieve life-changing wealth in crypto, period. And so what happens when you fail at market timing, as you will, people will fail, reads as follows. The impact of being out of the market for just a short period of time can be profound, as shown by this hypothetical investment in the stocks that make up the Russell 3000 Index, a broad U.S. stock market benchmark. And I'll just note, the Russell 3000 Index, that represents about 96% of investable U.S. equity markets. So it's pretty broad. It's definitely pretty broad, and you can buy an ETF that tracks that index. And here's what a sample investment would look like. A hypothetical $1,000 investment made in 1998 turns into $6,356 for the 25-year period ending December 31st, 2022. Over that same period, if you miss the Russell 3000's best week, which ended November 28th, 2008, the value shrinks to $5,304. Miss the 3 best months, which ended June 22nd, 2020, and the total return dwindles to $4,480. Now, folks, keep in mind, we're talking about, in this particular hypothetical investment scenario, a 25-year period. You're missing a substantial percentage of the gains over 25 years. If you miss just a week, Are you so smart that you're going to know which week out of those 25 years it makes sense to do so and so? Do you really think you're the guy that can do that? Because it's nonsense to think you can. Like, like the hubris of the human that would think such a thing. It's absurd. And so the reason I'm highlighting this, even though obviously crypto's more exciting and you can get way greater returns than that in an afternoon on a Tuesday, I get it. The concept applies to crypto. That's why I'm sharing this with you. That's the point. And then it continues, and for those of you that care to look, there is a chart on the screen right here. You can even pause if you want. I'm going to scroll a little bit lower. They write, there's no proven way to time the market. Targeting the best days or moving to the sidelines to avoid the worst. So the evidence suggests staying put through good times and bad. Did you hear that, folks? That's a key. And bad times, staying put. That's precisely doing nothing. Humans have such a hard damn time of doing nothing. It sounds easy. Just don't do anything. Oh, okay. Yeah, but then you see your net worth, you're going to I need to do something. No, shut up. Don't do something. Anyway, then they write, missing only a brief period of strong returns can drastically impact overall performance. We believe that investing for the long term helps ensure that you're in position to capture what the market has to offer. And folks, it's just data, it's just numbers. This is how it works. If you miss the days, you miss the weeks, you miss the months, that's it. Same concept in crypto, which is why I'm not going to. I just make sure I have exposure, and whatever happens, happens. I've had XRP at the all-time high. I've had it after that as low as 10 cents. And today it's whatever it is, 52 cents, whatever the time I'm recording this. And everything in between. 8 cents, I had it at $2, in 2021. Whatever. Doesn't matter to me. Either my thesis is correct or it is not. Utility matters and will win the day. And I think it is true. And I do believe XRP is going to hit a new all-time high in enterprise discovery. And if I'm wrong, I'm wrong, and then I lose everything. Too bad, so sad for me. I'm an adult, though. I understand the risks in what I'm doing, investing in XRP and crypto. And it is risky. Let's not pretend it's not risky. But there's so much real opportunity here. That's why I'm excited on a daily basis by this stuff. That's why I love running this YouTube channel. It's a blasty blast. My most favoriteest hobby I've ever had in my entire damn life. All up in this bitch. So, that's it in a bunch. So that's why I wanted to highlight this, especially on a day like today, when Raoul Pal says, don't F it up. That's what he means. That's why it resonates with me, and it really does make all the sense in the world. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.